Let's look at some examples of how these different order flow techniques can work in combination. In this chart, we have the mini S&P 1 hour time frame. Observe that I have marked market extremes from 1 to 3. In this candlestick chart, we can see a small volume profile plotted on the downward movement from 1 to 2. The idea here is to detect the fair value area of that particular movement and its point of control, which is represented as the red line. The indicator at the bottom is the cumulative volume delta. In this example, between lows 2 and 3, we have a selling absorption example, meaning that the CVD is producing lower lows, showing an accumulation of negative delta. But at the same time, price action is not being able to go down. This means that sellers are being absorbed by buyers, which is of course a bullish signal. In this case, price is reaching the point of control as support in number 3, and that is happening in the context of a selling absorption in the cumulative volume delta indicator. This is a good moment to employ the footprint chart in order to understand what's happening with the candlesticks that are touching the point of control as support. That will give us further insight onto why price reacted so violently after the point of control. Here we have the footprint chart of those two candles. In the first candle, we have price closing below 2 stacked imbalances and one single imbalance in the bid, which is a sign of selling initiation. However, we do see price closing above an imbalance in the ask, which is a sign of buying initiation. The story here is that for the most part, this candle had a lot of selling power until it met the support outlined by the point of control we just talked about. After touching the line, we can indeed see buyers emerging at the bottom. Notice also that we do see a high volume node occur below the close of the candle. That means that the greatest point of battle between buyers and sellers happened there in the area where the buying initiation began to take place. With that said, price closed within the fair value area, which is an indication that buyers and sellers relatively agree about the fair value, at least in this candlestick in isolation. In terms of price delta relationship, we can see that there is no divergence. We have a clearly bearish candle with a negative delta. A positive delta in this scenario would have been a stronger piece of evidence to the upside. In the next candle, we see a strong bullish move. The first thing that draws attention here is the absence of imbalances in the bid, and price closing above multiple imbalances in the ask, suggesting a strong buying initiation. Other than that, we see price closing above the high volume node and the whole fair value area, indicating that now there is an imbalance. Buyers and sellers are not agreeing about the fair value like in the previous candlestick. Delta is positive, confirming everything we just saw. The story given by the footprint can be summarized as follows. Price encountered a support while it was going down with violence, and a small degree of buying initiation began to take place. In the next candle, we see very strong buyers initiating a movement with very clear signs. That scenario ended up in a very large bullish move afterwards. Let's also now forget about the origin of the support line given by the point of control of the volume profile, and the fact that all of this was happening within a selling absorption in the cumulative volume delta indicator. Let's now look at what happened in the same time, but now in the E-mini Dow Jones futures. Recall that the S&P and the Dow Jones are highly correlated, so it's not uncommon for relatively the same opportunities to emerge in different ways in these markets. In this chart, you can see that I plotted an Andrews pitchfork in market extremes 1, 2, and 3. The pitchfork then gives us a projection about the end of 4 at the median line. Order flow analysis would enter the scene here to aid in the confirmation of the median line as a support level. So let's observe the footprint of the candles that interacted with the median line in this case. In the first candle, we have ambiguous readings in relation to imbalances in the bid and ask columns. We have price closing above and below both imbalances in the bid and ask. Let's contextualize that with other elements of the footprint. In this candle, it's pretty clear that most of the volume happened in the lower shadow, judging by the darker colors in there. Two important details here are that price seems to be moving away from the fair value area. Notice how it closes almost at the value area high. That gives the impression that buyers and sellers started to disagree about the fair value here. The second detail is that we have delta divergence, meaning that we have a bearish candle with positive delta, and that is a sign of selling absorption. This is confirmed in a way by price closing above the stacked bid imbalance at the very bottom of the candle. In the next candle, this notion is confirmed. the ambiguity in the imbalances disappears. We have price closing above a series of imbalances in the ask and one imbalance in the bid. We also have price closing above the fair value area, and notice also how the fair value in this candle is higher than the fair value area from the previous candle. Delta divergence also disappears, and we now have a delta that agrees with buyers. When you combine all these elements in a context, we can see price turning at the median line of the pitchfork, and the result is already obvious, a massive upward movement, just like we saw in the S&P. As you can see in these examples, order flow analysis gives a more granular view of what's happening between buyers and sellers. It's almost like putting candlesticks on an X-ray machine. Some people claim you should stop using candlesticks and focus on the footprint instead. That's misleading. Recall that candlesticks are the best representation of price. The footprint is about volume activity. Price and volume are the two types of information generated by the market. But price is at the top of the hierarchy. Volume only helps contextualize what happens. The greatest power comes when we combine these tools, not when we choose one over the other. We can go a lot deeper into order flow analysis, but this serves as an introduction. Let's now move on to the advantages and disadvantages of using order flow, starting with the advantages. Number 1. Order flow is an effective way of analyzing volume action, which in combination with price action forms a reliable framework of analysis. 2. It provides multiple ways of seeing market information in ways that might not be obvious by looking at price action in isolation. 3. It allows traders to put an X-ray on price reversals. 4. It provides granular market insight while analyzing the real-time reliability of support and resistance levels, which is fundamental in any serious trading strategy. 5. It can also provide new ways of seeing support and resistance levels that might not be obvious just by looking at price action. There are, of course, a few disadvantages too. Number 1. Order flow analysis can be overwhelming to learn in the beginning due to the way the tools work and the intricate nature of market microstructure. 2. Like we saw, order flow analysis is not devoid of problems. There is the problem of ambiguity, the problem of manipulation, and the problem of lack of transparency. Even though there are ways of dealing with these issues, they cannot be completely eliminated. 3. Order flow tools can generate confusion if the trader lacks the ability to put these tools under the appropriate perspective. 4. The real-time analysis of order flow tools to validate support and resistance levels requires great familiarity with the contextual analysis of footprint elements, which can be a challenge, especially in lower time frames, since market analysis requires greater speed. This is it for this course. I hope you have found value in it. If you enjoyed the video, please help support the channel by clicking the like button, subscribing to the channel, activating the notifications, leaving your feedback below in the comment section, and sharing this video with your trading community. Thank you very much for watching, and I hope to see you in the next videos. Take care.